Hey everyone, I got some great news coming out of PayPal in an otherwise difficult quarter. There was some bright spots, which is what I'm going to talk about in this video here. In its latest conference call, PayPal gave investors some big insights into what's going on and why things are looking bright, at least in one segment of the company. So let's get right into the details. So the CEO saying, encouragingly, e-commerce growth appears to have stabilized in the mid-single digits, way better than what we were expecting when we entered 2023. Remember, coming into 2023, worldwide economies had gained momentum in reopening. The lockdowns and the restrictions from COVID have been fading away, and people have been unleashing this pent up demand to get out of the house, to go spend money and time away from home. And that's not really good news for PayPal because it benefits when people are shopping online. But the good news that PayPal is saying here is that e-commerce spending is actually trending better than what we thought for this year. So that's been great news. Also, their branded checkout volume accelerated to over 8% growth, the highest monthly growth rate since the end of the pandemic. So, the end of the pandemic, it dipped and now it's climbing. And they expect branded checkout volumes will strengthen throughout the back half of the year, supported by traction from some key strategic initiatives. Also, inflation is cooling and they expect to see discretionary spending rise. So let me explain why that's the case. When inflation is rising, people are spending more money on necessities, things like food, rent, gas, and so on. But you're not using PayPal to make those payments most often. And so that's not really good news for PayPal either. But now, as inflation is easing, that's leaving more discretionary spending, meaning spending that people don't have to do, but they choose to do on things that they can spend money online. They can allocate more spending online. So that's a support for PayPal, and that's been boosting revenue for PayPal, and that's boosting their prospects for the rest of this year, which, speaking of which, in the third quarter, they expect revenue to grow by 8%, they're saying. And July was a very strong start to the quarter with growth of 9%. So it's July has started off better than what they were expecting for the third quarter. Now remember, the third quarter started in July for PayPal. Even though they made this report in August, July was not included in this latest report, in the second quarter report. I know that's a little bit confusing, but that's just the way companies report their financial statements. Their quarter ends, and they report maybe a month and a half after their quarter officially ends, because they need that time to collect the information, to put things together and present it to all of the parties outside of the company. And so it's not the most recent data, but what the company did provide investors with is an update into what's going on in the most recent data. And they're saying that July, which is the most recent month, is going better than expected. So that's really good. And so that's given management optimism, and they're saying they expect their revenue to grow to low double digits by the fourth quarter. So we're going on this accelerated trend, and the rate of growth is improving, not just the growth rate. So this has been good news and a bright spot in an otherwise difficult quarter for PayPal, which has a lot of uncertainty. Remember, they still haven't got a CEO lined up. The current CEO is planning to retire by the end of the year. Their CFO is a temporary CFO, an acting CFO. So a lot of question marks, and the stock has been hammered. It's down significantly off its high, but at least we had a bright spot here in that revenue is accelerating so far. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.